Hey guys, Crypto Sunday, and it's been a flat week for me. Remarkably, you don't get this very often in crypto. I am, well, flat to the nearest thousand, but I think the tracker is saying up around £100 or so, like 0.003% or something. But yeah, it's sort of mainly on Solana and sort of some of the altcoins not doing quite so well. Bitcoin sort of holding up reasonably well, and most of the other altcoins. So yeah, hit and miss. Looking at the CoinShares report, knew we were going to get one more bad week, and they are saying this is the worst outflow streak at $6.4 billion over 5 weeks. I do so point out that a lot of this could be sort of basis trade, people taking off the basis trade, so it isn't necessarily bad for price. They would have been buying the futures, and it may not have made quite as much impact as it's showing here. But yeah, 1.7 billion in outflows. So it's largely on Bitcoin, of course, and Ethereum. 978 million out on Bitcoin, 176 on Ethereum. 528 million on other is a little bit strange. Not sure what those others are. That's sort of half of the other assets under management. I might have a try and have a little bit more of a dig and find out what that is. But yeah, sort of very, very small inflow into the multi-asset one and a small inflow into XRP, small outflow out of Solana. Sort of these are all pretty small numbers compared to what we've been having, sort of 40, 50 million in, certainly on the XRP side. And a little bit of short covering, I suppose, on the short Bitcoin ones. That's down. And yeah, by country, yes. So Switzerland has the 527 million in outflow. So if that's other, I'm guessing that isn't Bitcoin. It could be stable coins or whatever. But yeah, whatever that is has come out of Switzerland, and then small numbers, all single digit numbers, other than the US, of course. But we may have seen potentially light at the end of the tunnel. We've had 6 days now of consecutive net inflow into the ETFs. We did have one day negative on BlackRock, but positive overall, and then 5 straight days, or a couple of 200 millions, 160 million, all net inflow into BlackRock, apart from one 0 day. Little bit of outflow out of Grayscale, as there always is. 1 day of inflows into the 1.5% Grayscale. Guessing that's some sort of volatility options or whatever it is. Ethereum, unfortunately, not seeing the same love. They haven't had a single day of net inflows this week, and that is marking now 13 days of consecutive outflow. So, yeah, even out of the BlackRock one, 4 out of 5 days of negative outflow and a 0 day. Money still coming out of Grayscale, of course. Money coming out of the small Grayscale. Again, strangely, a little bit of inflow into the high fee Grayscale, $10 million. Can only assume that's some sort of volatility trade, and they're not really interested in price. But yeah, Ethereum not seeing the love. There are filings to include staking in some of these, which are still being sort of looked over. I think if they got staking, they probably would see a reasonable amount of inflow. But yeah, we'll have to see what comes of the SEC's rules. They have sort of said that they're resetting the sentiment on how they look at crypto and looking to introduce slightly more sensible regulation. So we'll see. So as always, a bit of Michael Saylor MicroStrategy news. They had on Monday announced they had acquired 130 Bitcoin for $10.7 million. Not used to sort of them doing quite such small buys as this, although they have had a week or so of not acquiring anything, and they just state that they hold the same amount because he has to tweet every Monday, it seems. And yeah, they've sort of decided to just put a very small amount in at 82,981. Would have been nice for them to maybe hold off their money a little bit and be putting more in now, but that's the way strategy does it. He says if you're not buying the top, then you're leaving money on the table. I think people would probably say, potentially billions have been not lost, but left on the table by doing what they're doing. But yeah, 66,360 average, so it's not horrendous. And he is tagging in the new ones as well. So they have announced a new stock. So they had Strike, and they've now got Strife, it looks like. Perpetual offering, but this is not convertible. So there is sort of potential now that they would have to start selling some Bitcoin because they've introduced a stock that isn't convertible into shares. Or MicroStrategy shares, I guess, but it pays a 10% dividend. So unless they can actually start sort of making more money in their underlying business, then they might have to sell some Bitcoin to pay off some of this dividend, this 10% dividend. There is, potentially that is still sort of a good deal and would sort of help make their money. Sort of buy Bitcoin at 100,000, say it goes up to 150,000, you sell a little bit, pay out a 10% dividend, but you've made 50%. Internally, if you like, you've only paid out 10%, and you've made 50% on the underlying Bitcoin. So, yeah, that's a little bit unlike the sort of previous ones where it's 0% debt, but it's convertible into stock. So that just dilutes the stock. But obviously more risk that they might have to start selling Bitcoin, and the very first article you see, the first tweets of MicroStrategy selling Bitcoin will obviously send ripples throughout the internet. But there's plenty of demand for this. It looks like people want a 10% dividend stock from the looks of it. They initially looked to raise $500 million from this, and they ended up raising $711 million. So they're presumably going to put all of that into Bitcoin. It's been noted that the Strife new one has a 10% dividend versus 8%, but Strike, it looks like, is convertible, I guess, into MicroStrategy. So, as you say, this one's a little bit different. People wanting the higher dividend, and they're not necessarily bothered about having MicroStrategy shares, which you'd think is a little bit strange. There's plenty of sort of 10% dividend stocks out there, not sort of tied to the potential risk of Bitcoin. But maybe they see this as more likely to deliver, which would be a little bit crazy. It seemed an interesting move as well. Coinbase potentially looking to acquire Deribit. So Coinbase already do sort of futures, and they want to get more into the options market. A $4 to $5 billion deal for Deribit. They do in the last year $1.2 trillion in trading volume of options, futures, and spot crypto. Although I think people are mainly there for the options, but yeah, people like their options. I like my options, although I haven't sort of looked to do it on crypto. I think it's a little bit more expensive, doing it that way, and I prefer to sort of do my small stock strategy on interactive brokers. But yeah, people love it. On the 20th of March, Kraken announced plans to acquire derivatives platform NinjaTrader for $1.5 billion. So everyone wants their own options platform, it looks like. Some of these numbers are pretty staggering, really. Coinbase said derivatives volume in 2024 grew 11,000% year on year. CME Group saying that they're doing $10 billion in daily volume, 300% increase from last year. They're looking to launch Sol futures in sort of potentially in the next month. So that should add to volume. Good for CME Group, as I'm a CME holder. Robinhood rolled out crypto futures, and yeah, basically everyone is going heavy on derivatives. So I have to see sort of what this brings. A lot of people would call this paper, paper trading, increasing the supply potentially. But yeah, I've been seeing a lot of people posting on Twitter and sort of reposting this, maybe not this one, but various global M2 money supply charts, overlaid on top of Bitcoin, sort of delaying the M2 supply by sort of various amounts, 50 days, 70 days, 100 days. They're saying the M2 growth is a leading indicator, basically, and saying that sort of Bitcoin tracks this reasonably well. Obviously, not one-to-one because it is Bitcoin, but yeah, you tend to, in the sort of previous bull markets, you tend to have seen a fairly large and steady upturn in global liquidity, and well, certainly in 2017, it looks like Bitcoin sort of front ran the global liquidity. So saying that, a lot of people now are saying that it works with a lag. It has worked with a lead before, but I think over time you can say that it broadly correlates with it. And sort of certainly more recently, we've seen a little bit of a divergence. Sort of 2022, it sort of led, you could say, probably marked the bottom. Bitcoin bottomed and liquidity was already going up. And yeah, then we started to sort of get a relatively decent 2023. Liquidity sort of flatlined for a bit, and Bitcoin flatlined certainly, and then obviously rocketed up before the US election, sort of September time. It was rocketing up, and then we got the election and Bitcoin rocketed up, but you could say it was possibly helped along by this rise in liquidity. And then liquidity has obviously dropped, and you're now getting negative stock prices and negative sort of crypto sentiment and crypto outflows from everywhere. Sort of as this is where people are sort of talking about the lag now and saying that it's always worked with a lag. I would say that isn't true, but it looks like M2 liquidity bottomed in January, sort of around that week, January the 6th. And started rising and has been rising for 2 months, basically 2.5 months nearly. Looks like this is weekly refreshing data on a Monday, so I'll be very interested to see the number tomorrow. Seeing some people saying this may have already topped. It's obviously just made a new all-time high from September 2024. So yeah, if this carries on up, a lot of people are saying, the rise in Bitcoin is sort of inevitable within like a couple of months of liquidity bottoming. But it would be nice to sort of see whether it's just, this sort of relatively small amount, I suppose, 104 trillion to 109 trillion. Obviously, that has a huge multiplier on something like crypto. But yeah, if it were to carry on, it'd be nice to sort of think we've bottomed and we've got potentially 5, 6, 7 months of runway left to sort of take us into the end of the year. So I'll keep an eye on this M2 supply tomorrow and certainly sort of update over the next few weeks. So it seems quite good. I haven't sort of found too many places giving away this sort of up-to-date data for free. There's some other charts in here that I don't really sort of pay too much attention to. I will look at, but not sort of put all that much stock into. You've got things like the Mayer multiple. This is basically comparing Bitcoin's price to its 200-day moving average. I'm not really a fan of moving averages, but people seem to sort of trade on it, certainly on crypto. You can sort of see like back in 2021 in the sort of bull market, we were getting really, really high. So they're saying 2.4 level. I'm guessing this is sort of standard deviations above the 200-day moving average. Sort of indicates potentially a top. We got sort of 1.84 on the in sort of March 2024. Sort of zooming in a little bit more here, you can see it's sort of that was a fairly high point. Basically the high of the post ETF boom, and yeah, in the sort of post election buzz, we got to 1.5, 1.53, and it's all the way back down to below 1 now, and sort of around 1 and below has often been seen as sort of a buy period. So yeah, potentially it got down to sort of 0.85 to between 0.85 and 1 around the bottom in September, sort of before global liquidity started pushing up. I do put far more stock into global liquidity rather than things like this, because it is just a smoothed out version of the price. But yeah, if people like this sort of thing, then maybe worth having a look. The market cap versus realized cap ratio people like to look at, so whether people are in profit on their Bitcoin, basically. The sort of realized cap is, I believe, how the price at which every coin in the world basically last traded. So whether people are holding on to their coins, and if sort of current market cap goes an awful lot above realized cap, then yeah, people see that as potentially a top signal. This one has had some more time in the red, certainly. This one could almost lead you to think that we have sort of already topped. We sort of spent a reasonable amount of time in the red back in 2021, sort of early 2021 and then late 2021, and we sort of had a reasonable amount of time in the red early 2024 and then sort of post-election 2024. I still think we've got a reasonable amount further to go, and I do wonder if this data could start to be getting muddied basically by ETFs and certainly derivatives, as we've been talking about, and yeah, it's sort of not as simple a market as it used to be. That's maybe a good little website just to keep an eye on some of these metrics. Open interest, is quite handy. Funding rates, to sort of see how many people are, using huge leverage, or whether they're sort of been flushed out, basically. Open interest has sort of come down to relatively lower levels from where it was. Always like to keep an eye on the hash rate as well, being sort of so heavily involved in the miners. And yeah, we've sort of seen a little bit of a plateau, sort of a temporary plateau in hash rate, I suppose. We're sort of looking on the 7-day average hash rate. Sort of beginning of the year, it was like 780, 800, 812, and we're sort of now, after a little drop in the last week, back down to 794, 805. So yeah, that's somewhat helping. It's up a little since sort of post-election time, but 755 back in November to 794 now. It's not all that high of a rise, not compared to what we've been seeing over the last year with everyone expanding. So whether sort of some people are turning off, whether you've got other miners repurposing chips for AI, that would sort of bring hash rate down a little and provide some help. All good potentially for crypto mining. And on the 30-day average, it's more smoothed out, but again, basically we were sort of at the similar levels to where we were at the beginning of the year. So that certainly helps miners if if price can get back to anywhere near all-time highs, really, then they should be making a reasonable amount of money. The profitable, sort of efficient miners, at least, your Irons and Clean Sparks and people like that. I think people like Hive will still need, a fairly big move up in the Bitcoin price, but that's what I'm gambling on, I guess. Again, sort of looking at difficulty, it's up to 112, and it was sort of, 109 even back at the beginning of the year, sort of 108.5 in mid-December. So 3 months at a sort of relative plateau. I think this adjusts tomorrow. A very slight increase is expected, sort of based on hash price and block times. So still sort of 112.5. I think the miners could really do with a sort of a sustained decent gain in Bitcoin without sort of the hash rate moving up all that much, and that's what I'm betting on basically. Who knows whether it will actually happen. So looking at coins for the week, obviously with the total being flat, it's a little bit sleepy this week, but not the worst thing, I suppose. People, TradFi sort of doesn't like the volatility, so having a quiet week wouldn't be the worst thing. But Bitcoin's up 0.7%. I got too used to saying down. Solana is down 1.5%. Ethereum up 5.6%. That is the outperformer for the week, which I haven't said for a long while. Chainlink up 2.5%. Helium up 2.5%. Jito down 2.7%. Honey up 1.86%. Metaplex up 5%. And Radium up 5%. Interesting on Radium that Pump.Fun have confirmed that they have launched their own DEX, basically, automated market maker and everything, and they have dropped Radium. So they've seen a fairly big knock to their revenue, and sort of the part of the reason I initially bought Radium and part of the reason a lot of people were bullish was on the sort of enormous revenue they were generating, and that doesn't go to zero, of course, but it does take a rather big knock. So that was an awful investment, basically, 75% down nearly, and that is sort of far worse than the coins that I sold. I do sort of keep making the point that something like Helium sort of down 20%. Can't remember exactly what I sold to buy the Helium, but you could say that it would have been one of things like Quant and Polygon and that sort of thing. And some of those coins are down sort of 30% since 30% or more, 40% since I sold them. So selling them into Helium and then being down 20% is sort of ironically outperforming. So it was worth the sale, but certainly things like Metaplex maybe is possibly worse off for going into Metaplex, and then Radium far worse off for going into that. But yeah, you have to take these gambles, and we'll see if we get a bit of an altcoin run and see where these go. So leave your thoughts in comments below, and like and subscribe. See you soon.